Guys, welcome back to the channel, welcome back to a new video. It is the day after BTC dumped down yesterday almost 10%. It was an absolute bloodbath after the CPI data came out. Also, all the stock markets went down and the dollar went through the roof. Now, you could have been a perma bull and followed all those crypto gurus and you would absolutely be liquidated yesterday. But we already warned you a few days ahead, be careful, we might be dumping down. Just look back at all the videos, look back at the tweets. I said already, don't get too bullish. We might be dumping down because everything is coming together for a dump, and sure enough, it did. Alright, now of course the question is, where do we go from here? Can we expect more dumpage or do we see maybe a little bit of a relief rally? I'm going to show you exactly what I am looking out for, and we're also going to dive into some of the inflation data because that's very, very important. If you like this kind of content, please do me a favor, like and subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment or share this video with your friends if you think this is useful. Feel free to follow me on Twitter and Instagram where I update you multiple times a day. And yesterday it was a rain of updates from my side on Twitter, so definitely check that out if you have missed that. Now let's start diving into the charts. We are starting off here with the BTC USD pair on the 4 hour, and I just quickly want to show you one more time the turnaround point for BTC and why that made so much sense. That was that moment right here, approximately 22,200. I will shake this blue box a little bit. As you can see, that was our box of all the confluence where we had the golden pocket from the rise from the all the way at the top to the bottom, then the rise up from the bottom to the golden pocket. So that went perfectly. We have the value area high of the macro volume range. Then we have two support and resistance flips that are the yellow lines, and we had this macro resistance line coming in. So to go lower here, also on an overbought situation, bearish divergence on the 4 hourly, it just made all sense and everything came together, just like I also called the top here, because here also everything came together for the drop. And I just want to show you exactly that one more time, not to show you that I'm oh so amazing, but I just want to say that sometimes it is easy if all the signs are coming together, and then just be careful being a super bull because everyone is then rushing bullish, and eventually you get that hard drop down and everything could be the trigger at that time. Now, measured from the bottom here to the top, of course we can also pull a fib again, and then you can see that we were traced exactly to the golden pocket at approximately 20,000, which also coincides with the top of 2017. I keep that yellow line in there, the top of 2017, because I've been support and resistance so many times, and you just see now even so much later that it still comes into play. That's why I keep it in the chart for you guys to see. Also, we are underneath the point of control, which is now resistance. Doesn't really matter which chart you're taking, the one from Bitfinex or from Bybit or from Binance. I sometimes say that from Bybit or Binance is here at approximately 21,500, but really now it doesn't matter anymore which chart you're taking. We are trading underneath the point of control, and we are close to the value area low here at approximately 19,500, which is on most charts at the same level. So 19,500. I think it makes a lot of sense if we're going to revisit it and eventually maybe revisit that box right here where we had that major support and resistance, and that already now came into play a few times. I think it makes a lot of sense that we are going to revisit. The real gem, of course, would be if we are going to test or take out these lows here, 17,600, because I think there's a lot of liquidity underneath. Now, I have been thinking this morning, what would be a preferred number for a bottom? As I already said multiple times before, I don't really care where the bottom is, but this morning I was thinking, well, if I need to mention one number, what would it be? And I think approximately 14k would be nice. Why? Because a lot of people are expecting 10k, 12k, so then there are a lot of orders there that will never get hit. Everyone's waiting and then suddenly we spike down and then we go higher. Everyone misses the train, jumps on the spike. And the second thing is that is a new significant low underneath that 17,600. You don't actually want to have a new low on, let's say, 17,000, just a few hundred underneath, but a real significant low that we can say, okay, now the liquidity underneath that 17,600 has been taken out of the market. We had a spike down, and now we can search higher again. That would actually be a very, very nice scenario. So again, to the downside, we first have the value area low on 19,500. Then you have that support and resistance box that approximately comes in just underneath that 19,500, and then to 18,600, shall we say. And the real jam again is closing underneath the 17,600. to the upside, I would be looking at maybe 21,000-ish to, let's say, 21,500 to maybe have a pump or recovery there and then go lower. That would be very nice, and I can also maybe add a little bit to the short position. What would be very bullish, of course, if we would reclaim the complete dump that we did yesterday. I do not think that's going to happen because the news is just very bad. Everyone is now slowly looking at the Fed for next week, rising the interest rates, and I'm going to tell you in a second what I think about that. That people are maybe a little bit more risk off and therefore selling the assets instead of getting back in, because inflation is still the narrative, inflation is still the story, and that still controls the entire market. Inflation is the narrative, dollar is the leading, and everything is following the dollar. So the dollar is rallying up, stocks, gold, silver, Bitcoin is selling off. That's just how simple it is right now. Let's say what could also be one bear scenario. Let's say we would pump all the way up, swing fill pattern above this purple line, and then going lower again. That still would actually be very bearish, but if we pump back up as a bar pending and holding it, of course that is super bullish. Then I need to change the narrative and we are going higher, but I do not expect that. Usually when we have visited the value area high, we are breaking the point of control. There is a very big chance that we are going to revisit the value area low or even a little bit lower. So I'm still actually looking out for lower later on this week, beginning next week, even if we maybe now and tomorrow get a bit of a pump. Quickly then to the indicators, momentum wave maybe wants to roll over here a little bit on the 4-hourly. Money flow is coming down, not tremendously. I expected a little bit more, to be honest, and looks like the VWAP has an inward curve. RSI is already coming together and coming down. On the daily, there we're seeing a red dot being printed. I hope my face is not in front. So there you're seeing that a red dot is being printed. That of course makes a lot of sense after such a big dump. Money flow slowly curving lower, VWAP lower, RSI is lower. So on the daily it looks actually pretty bad. On the hourly, the money flow comes down. To be honest, after the dump of yesterday, I expected it also to be in the red already, but it is coming down close to the zero line. RSIs are on the ass, and the momentum wave looks like it also wants to curve lower, VWAP lower. So yeah, that looks like it probably is going to end up in the red anytime soon if we do not bounce up and get a little bit of a relief. S&P 500, I said if there's a moment to turn, it will be the golden pocket. That also is the 4,165. That would make a lot of sense. There's a strong resistance. We didn't make it. We turned around at the 0.5 on the fib retracement because the news of the CPI came out an hour before New York open, and because it was bad right away, there was no moment of retrace. So it's just lower, and then we are soon coming into this support and resistance box where I said could be a nice consolidation phase. Eventually my macro is still on reaching approximately 3,500 for the S&P. I think that's a nice round number. That will of course take some time, but it's still the macro that I'm looking out for. So far, dollar index, a little bit of weird place actually to time out. We shot up yesterday after that news. Then we having here the golden pocket that we kind of breached but not really hit the 78.6, and now we went down and we didn't retest that yellow line exactly to the dollar, 109.29, and now it looks like it's taking a little bit of a breather. Yes, 4-hourly red dot, but I mean, what else do you expect after such a pump that we are going to zigzag a little bit before I think we are going higher, because inflation was still name of the game. I quickly want to show you yesterday S&P 500 went down more than 4%, Dow Jones approximately the same, Nasdaq a bit more than 5%, absolute bloodbath. Right now futures slightly in the green, nothing major. This is the CPI data from yesterday, and yes, the inflation came down. You would say, well, why are the markets then so overly bearish? Well, it was because everyone expected much lower, 8.128%. I actually thought that we are going to dive just underneath that because oil went down, so I was thinking 0.1 to 0.2% underneath the expectation. Therefore we'd have a pump up, and then later on we are dumping down. That of course didn't happen, and I was prepared for both scenarios. That's why I'm always looking at a few targets to the upside, to the downside. The price can only go two ways, up and down, and if it trades up, then those are the targets we're jumping in. If it trades down, then those are the targets then we're jumping in. And therefore, like I said, I have to admit that I was wrong a little bit about this, and that was also the big shocker I think for the rest of the market, and then we just dumped down tremendously. Now this of course is bad because that means that the Fed needs to still be very hawkish, very aggressive to take the inflation down. But what was most surprising is the core inflation. That is the chart that you're seeing right here, because that one rose up. Now the difference between this inflation chart and this core inflation chart is that I think food and energy is excluded from the chart, and there you see that we suddenly have a rise up, and this of course concerns the Fed a lot. There you actually also see that we are very close now, suddenly are at these highs here again at 6.4, 6.5, and last month was flat, but that was actually just the bottom, and now we're just going up again. So long story short, the Fed will raise the interest rates next week. That 75 basis points is now of course a 100% guarantee. I said it also yesterday on Twitter and in the videos. That one is a guarantee. The question is, since the data was surprisingly bad, are we getting a 1% interest rate hike? And right now 30% is expecting a 100% rate hike. There is still a little bit of data coming out in the next couple of days, so maybe this percentage will go higher or lower during the next couple of days. I think actually yesterday this percentage was on 34 or 33%, and now this morning was on 36, so we do see that fluctuate a little bit, but the majority is still expecting 0.75%. What I find most interesting is the tone of the Fed after the interest rate hike, because I think the data that came out yesterday will concern them a lot, and they have made it very, very clear they only have one goal right now, and that is get the inflation down. And if that means interest rates need to go much higher, you will lose your job, housing will crash, stock markets will crash, yada yada yada, it's fine. They want to have inflation down, because if they don't do so, it's the end of Western capitalism. 100% sure. Inflation is the worst for the economy. So that is their main goal. I will jump into inflation on a different video. I'm actually planning on making a short video where I explain a little bit more about inflation and why this is so bad and why this is so important to get it under control. But we'll do that another time. Alright guys, if you like this kind of content, please do me a favor. Like, subscribe, click on the bell, click on all. Share this video with your friends if you think this is useful. Just for once, try to share with someone else so we can spread the knowledge. Also, feel free to leave me any comments. Do you agree with me or you don't agree with me? I'm very curious. And follow me on Twitter and Instagram. Like I said, I update you multiple times a day. Guys, thank you so much. See you next one. Bye bye.